Okay, all right. So 3, 2, 1. Welcome to a Two Tokens podcast. Delighted to be joined by Eric from Two Tokens and an old friend of mine, Philipp Pieper from Swarm.
Thanks, Jonny.
Thanks for coming.
Yeah.
Obviously, we've got a masterclass session later on this afternoon. But for those of the listeners that haven't heard and listened to you before, could you explain a little bit about your background, what you've done, how you got involved in this crazy space, but also about Swarm and some of the things you've been doing, and you've been very busy this year.
Very, yeah. So I'll make it short about the background, but basically I'm a mix of having built startup companies, SaaS companies, internet data companies, but also had a background actually in finance. So I did private equity with Deutsche Bank. I did portfolio management with Allianz Group. So I left that world in hopes to go to technology. Now it's caught up with me again that suddenly sort of finance and sort of software becomes more relevant to the banking space. So I think this, together with Timo, who you know as well, my co-founder, he has a background in sort of building SEC compliant broker dealers, but also software. So suddenly those things matter a great deal when you're in this world of actually sort of building things that are live and in real time changing with the regulatory landscape, and trying to challenge sort of existing industries. Whereas you can't just come at it from a radical perspective only. You have to do it sort of with interfaces that work, that you gradually sort of build an industry, a product that actually sort of takes over maybe old ways how things are going. So what we do at Swarm is, very simply said, we've been in this tokenization space for better part of 6 years now. And we've always tried to push the limits of what you call today sort of RWAs, real world assets. So we started off by building open source technology for issuance. So how to build compliant token offerings, but then sort of started to gradually sort of move into how to build liquidity, and I call it grander composability tools. So what do you do with those tokens, and how do you trade them? How do you do that in a way that doesn't rub regulators the wrong way? Let's put it this way. I think we've come a long way as an industry, and now sort of there's a whole lot of excitement around these things in a renewed fashion.
Okay, so in plain English, even though we're in Holland and you're a German, in plain English, my understanding of what you do, you have a regulated exchange. Some of the tangible things you've done, it's possible to trade 7 S&P 500 stocks on your exchange?
Let me segment that a little bit before, So what we have is two businesses.
Right.
One business is what you see publicly on swarm.com, which is what you refer to, where we have around about, I think it's 12 publicly traded stocks and bond ETFs that are basically fully backed tokenized assets that can be purchased as well as traded on the platform. But we also have a gold offering, which we might talk about in a second, which is also fully backed. We collaborate there with Brinks and others. So that's what one part of the business is, where we take a principal role as an issuer. We have a fully public market prospectus for these issuances, et cetera. And we are the ones that are basically selling it into a user audience that are predominantly crypto, that want some kind of trading asset that has a higher reliability than what you get in the other parts of the market. The second business is then that we use the exact same software that we're using for ourselves, and we give that to others to build their own markets. And that customer group is anything from financial institutions to issuers to any kind of special situations that want to use that software that need that kind of pedigree that we've been building for ourselves.
In a white label sense, with your, I would say your license in the back, or not?
Well, it could be from two, right? It could be actually using the same kind of pedigree on the licensing and on the prospectus side. It could also be that they have their own, or they don't need it, right? Okay. But still, sometimes, even if they don't need it, sometimes they need the controls because they want to be comfortable with it, regardless whether the formality requires a license to be in place or not.
You started 6 years ago.
Yeah.
It was the Wild West at that moment, I suppose. And
very much.
Very much. And then regulation kicked in, or it's not yet kicked in officially, but it's coming.
Yeah.
So how did that change your business?
Well, evolved quite drastically, I would say. So we started off in the United States, right? So, at the time, there was no regulation. There was securities, regulation, but nobody had a concept of how to apply it on sort of whatever tokenization means or whatever token infrastructure means. But it became, so this was 2016, 17 we started off, and then 2018 it became evident to us that basically America was not going to take a lead on anything in this direction. And luckily, sort of, we had the European pedigree, me being German and my partner being sort of, Swedish, that we said, okay, let's just go to, well, let's go to environments which have a much more forward-leaning stance to this. So it was basically sort of, Switzerland and Liechtenstein predominantly at the time, then suddenly Germany coming along with a pretty interesting framework. Now, actually, sort of fast forward to today, now we're just about to see on the 1st of January, MiCA hit. How far has that come? I mean, the confidence in terms of knowing what you're dealing with has incredibly increased. And now we have the Trump administration, which are promising to actually revise some of the stances by the SEC and the CFTC in the United States. Again, full circle, like maybe it had to come through these, trough of despair to get to a place where I think we've now, we're honing into a pretty interesting market situation.
Well, it doesn't mean you're going to be going back across the Atlantic to go back to America. Why not? They'll be welcoming you with open arms.
But how long will it take before a promise of Trump will find its way into legislation?
My personal opinion, very fast. Extremely fast.
I'd agree with that.
And the reason is that, look at it this way. The SEC predominantly has done enforcement by action. Mm-hmm. So if you don't have the danger of action and you maybe even have no action letters, that can go very quickly. And we've seen actually sort of the American markets and other financial market infrastructures actually go really quickly into those areas that present opportunity, right? So I would be surprised if with this new sentiment that, it doesn't take as long as Europe, which, builds regulation, passes regulation, implements regulation. But here it's just a much more, I'm not endangered by action, and therefore I can do things a little differently.
So what's going to mean for the market then? Because if everybody then says after January 6th, let's start tokenization of my assets, let's do something with crypto. How does that?
Yeah, I wouldn't see it so absolute. It's not, number one, not everyone, and number two, it's not like you can do anything you want to, right? You should still be very careful how you build these things, and not because of regulation, but because predominantly doing the right thing. So, we have known technology now. We have, on every level, the tooling is incredibly powerful. Like we know which blockchains work how. We know actually how oracles work. We know how wallet infrastructure can be used today and improved tomorrow. We know actually how these offerings work. We know actually how to integrate them with banking systems. All that didn't exist.
All the plumbing, ago. Really.
The plumbing, right.
But Philipp, can I go back to you mentioned gold and your relationship with Brinks. Brinks is a massive company. It probably moves more physical cash for central banks than any other. I think 67,000 employees they have. Can you explain what have you done with gold? Or I don't mean where have you put it, but in terms of why do you think it was necessary to tokenize, digitize? Let's be honest, a metal that's been around for millennia and people relied on it as a store of value. And you've kind of brought it into very much the sort of 21st century.
Well, so tokenization of gold is not a new thing, right? So it's not that we can claim that was a brilliant, genius idea, but so we saw the token offerings that the market had, USDT Gold, so Tether Gold, as well as Pax Gold and others, right? And they were, pretty decent volumes. There seems to be a big need to actually sort of, since Bitcoin is digital gold, to sort of have a gold tradability to escape volatility. Not everyone who actually lives in these bear and bull cycles of the crypto market wants to trade into a dollar-denominated asset.
Yep.
Because that's what they're sort of have a pretty cynical view on anyway, right? So gold is a pretty attractive asset and trading asset to have in that context. When we saw and were sort of part of the evolution of MiCA in the market, it became evident to us that this new regulation had a pretty severe impact on some of these elements. Stable coins in one place, but also gold as an asset reference token in the other place. And we couldn't see that some of these assets would actually migrate into that regime, just because the DNA of those assets and the way that they've been doing things, it's really hard to retrofit that back into such a regulation, right? So to us, that meant there's an opening. And that opening actually sort of the way that we built it was also that, respecting MiCA and other things, we basically built an ownership certificate by an NFT that represents either an ounce or a kilobar. And that is fully asset backed. It's stored at Brinks, and it's sourced by the highest pedigree of gold companies that are in the market. And on the second level, then there's a non-governed smart contract where you can fractionalize that. And that means that you don't have the same kind of impact within Europe, within the European trading scheme, that basically others have. Now, that gives a pretty high degree of confidence to those that hold it, because they always see what's going on. They have the numbers of the gold bars that they actually are in ownership of. They can verify that with data that is coming from Brinks directly, which is pretty massive. And by the way, if they want to, they can redeem it physically to their house.
Right. And how does that work so for all custodial services, you have your costs involved, right? The vaults, and that's the same for crypto if you have custodial services. How does that work? Has the owner of the gold also has a contract with Brinks and pays monthly fee for storing the gold? Or?
No, and therefore, in that context, we are the service provider. Okay. So also there's a big difference between how the named tokens and us are doing that portion as well. The named tokens are basically working through devaluation through inflation, which we know from the money markets, right, or from issuing fiat currency. And it's not always transparent actually where these fees occur, and like who's paying what in that context. With us, it's very clearly. So there's a purchase brokerage fee, and then there's a credit amount that goes against the custodial fees, which is actually put into a smart contract and then drawn from over time. That basically then counts against the custodial fees. Once they're actually and that's at the very beginning, probably a time frame of 2 to 3 years that covers. Once that's up, there's a negative credit, and in order to move the underlying NFT, you'll have to unlock that again with actually depositing more credit.
It's not that you nibble a part of the NFT.
No, and
towards your
yes,
own,
of course, there's terms that if this goes out of hand and we have too much negative debt there, that we could pull the trigger and say, okay, we're forcing to sell, but then everything minus those fees actually goes to the user, so it's a forced sell, right? But that's a much more honest and transparent and actually blockchain based transparency than all the other things there.
But it's also adds complexity to the way you implement it, right?
Well, but sure, but those that are impacted by that are basically sort of it's number one, it's further down the line.
They understand what you're doing.
They understand it, and the norm is that it doesn't occur. But it's the major part is that they can see it all the time. They can verify it all the time. We're actually going to launch soon actually a proof of reserves. Cryptographically proof of reserves that actually they have full clarity that they don't have to trust us saying something about Brinks, but Brinks is verified on the spot with the information that they give. So it's basically replacing any kind of auditors in the equation as well. So.
And will you allow lending borrowing on these assets as well, or is not part of what?
Composability, as I said before, is like key to what we do.
Okay.
Meaning that all these assets should be tokenized for a reason. And the reason is not just to transact between you and I, but the reason is all the modularity and composability that DeFi gives, meaning that lending and borrowing as a protocol should be possible, right? Doesn't mean that we're going to be doing it. It could be that they just become compatible with how other lending protocols function.
Are you doing it or not yet doing it?
No, we don't do lending and borrowing. And by the way, the term lending and borrowing is also a misnomer in the space. Because in the end, it's just options. You're giving an option, a smart contract-based option, right? And that sometimes confuses regulators as well, because they think in terms of lending and borrowing against balance sheets, et cetera. But it's completely a misperception that even a protocol is doing lending and borrowing. It's for ease of communication that people call it that, but it's basically just.
But this is the first step towards being able to unlock some liquidity or use your assets in ways that historically have been quite difficult to do.
This week might be an announcement in that direction.
Cliffhanger.
Okay, and just finally turning towards you talked about obviously MiCA coming in a matter of weeks now as we come towards the end of 2024. Yep. What are your thoughts turning to 2025 in terms of some of the potential challenges, but also some of the opportunities? Because we have seen a growing awareness, I'd say, in 2023, 2024 of this space. As you know, I often quote the numbers of 3 or 4 trillion is crypto, but it's the 2.2 quadrillion of other assets, and that's something which I know you've been very much focused on, and something that I know too, Tokens. You do very little of anything in the crypto space. It's much more something that's very tangible. So perhaps I can ask yourself, Philipp, and then Eric, come back to you in terms of some of your thoughts for 2025.
So the reason why we started to focus on these assets that we've chosen, or we together with the community have chosen for the crypto space, is that we believe that the rest of the space, the quadrillion that you're mentioning, is coming in, but it's a progression, right? Yep. So everything that we're doing here is for those that are already aware with what wallet infrastructure means. They have meaningful assets on chain. There's no barrier for them to actually engage with these kind of things, right? That said, we're moving, like I said before, we're moving quickly into the tooling and the confidence actually being so high that all these different actors are now putting these, not just POCs, but actually productive things in place, and are going to be starting very quickly in 25 to actually roll some of these things out, which have, like you say, nothing to do with the crypto space. Yep. They're just an efficiency tool. Now, we have a lot of homework to do as Swarm, but also as an industry. We have to make things simpler. That's very easily said. That's one key thing. So abstraction of whatever the concept of a wallet is key. Meaning that in the end, these things should look, feel, smell like a Web 2 infrastructure. And nobody should even know that it's blockchain that's the pixie dust behind it. But it should be just a service that speaks for itself because of the material aspects of it. Right? Yeah. Now, the second thing is, I think in that context, a lot of people, sort of like I was describing in the gold context, have like understressed confidence and trust. Like they threw out some assets or things that basically were described as something credible, but they didn't do the extra mile to prove it out, to actually really do justice by what a normal investor would expect to be the case, right? Meaning that you have a public market prospectus or something declaring what it is. You have the technical means to prove it out. You actually give the confidence to the investor landscape that you're by all means all the time actually secured if you buy these assets. And don't fall into the trap of someone pretending to be something or scamming even, right? So I think there's some steps that are still needed for the industry to like agree on common language in that sense. And then in the end, I mean, part of that is also just, trust in infrastructure. So what are like declarations of smart contracts, and how do you actually sort of document to the outside world, outside of a security audit, that things are what they seem to be or should be, right? Because if we want to bring this into a wider realm, then we have to work on, I hate the word standards because standards is only by adoption, but we have to work on something that everyone agrees is secure.
Everyone's comfortable with what it says. And before I move on to Eric, you used a word at the very beginning of that, of your response, community. And I know for me, this is one of the fundamental differences of, if you like, the more digital landscape as opposed to the traditional. In the traditional market, the asset manager, the bank, and I was guilty of running a fund management business, we came up with a product and idea and said, you need to buy it. Mm-hmm. In the more digital environment, you actually did go to your community and say, which of the S&P 500 stocks would you like us to initially put up? Mm-hmm. Is it sort of General Electric, or is it Tesla, or is it this company, or is it that company? Mm-hmm. And I think that's something which seems to permeate the landscape. And I know you were very active in terms of asking your community what you want, and then we'll go and try and build it. But Barry, can I turn to you, because you've Two Tokens been involved in a number of different projects. You have two essential businesses. One is on the education, and we're running these masterclasses to help you run that process. Right. And you're also have a commercial arm, which is basically helping businesses to tokenize and solve real problems.
Well, awareness is not only on the I would say the individual part, but also the businesses that want to use it and don't have a clear grasp of what things are. And behind you on the screen, there's a number of companies that we work with and help us to build these consortia. Because if you use tokenization, you don't use tokenization for your company. You use tokenization for value chains, supply chains, to make transition of value much easier than it was in the past, and transition of information as well. And that's I would say, the promise of blockchain as a whole. And we, from that abstract level, we go into much more detail, working with these consortia to make sure. And again, you're right, standards don't You don't build a standard is adopted and becomes a standard. But we still try to work on a thing that could become a standard, and you have to start somewhere, and that's basically what we do, and not from the foundation to tokens alone, and also with the advisory roles that we have to organizations, and with these organizations we try to bring in tokenization in these value chains and make them more efficient.
Okay, and turning to next year, just a couple of thoughts. What do you think 2025 may hold for Two Tokens and some of their clients?
Well, I think that MiCA brings a lot of promises to the market, and also Trump brings a lot of promises to the market, and how that exactly will evolve, I'm not so completely sure, but I think the attention towards tokenization, how you use it in companies, is increasing, and we are still helping a lot of companies, and the number of companies that are reaching out to us increases every day, I would say. We talk to a lot of people.
Any particular sector? Don't need names, but sort of...
No, the energy sector.
Okay.
So we're looking at tokenization of energy, and then that is then the green energy, not fossil fuels, but and also carbon.
Right.
I think that we did in the past. We also looked at invoices as a flow of information and money. We did look at communities, concert tickets and things like that, to tokenize them and to make sure that you can trade them within your community in I would say, a way that it is profitable for all and not just for the seller of the tickets.
Yeah,
and
not just the ticket touts.
No, exactly. And I think that, and also you and I know a lot of people that have scrapbooks of tickets of the events that they went to, and now you are creating wallets with these tickets and the digital proof, and it's a thing that people really like, and you can hand them over, and you can, when they become valuable, and you can share information with that, and there's a lot of opportunity there.
So you'll be able to give your grandchildren your sort of Taylor Swift tickets then, all in a digital format.
It could be, yeah, but I didn't go to Taylor Swift, I can tell you. But yeah, it could be something like that. It could be something like that.
Brilliant.
And there's a lot of opportunity there for Two Tokens as the foundation and as the advisory role that we have, which is not in the foundation but in a normal.
Okay.
Corporate.
Well, look, in closing, Philipp, how's the best way people can get hold of yourself?
Oh, we're actually everywhere, very easy identifiable. So on swarm.com, there's all socials that point to X, to Telegram, to LinkedIn. Me personally, I'm on X and LinkedIn in the same fashion. So Philipp Pieper on X as well.
How do you
as
spell
on
Piper?
Pieper. So it's the Dutch way.
It's the Dutch way. It's not the English way. I always get caught.
Exactly.
And Eric, I can't even start pronounce your surname.
No, don't do it.
He has a German name though. It's Polish.
I'm German.
So.
God, surrounded by Germans. What's going wrong?
No, twotokens.org, and you'll find all the information about the projects we're working on, the consortia that we're building, and the things that we want to do in the near future as well. Yeah.
Super. Okay. And my name is Jonny Fry, JONNYFRY. That's really easy. And if you want any more information, be delighted to put you in contact with both these guys. But thank you for joining us.
Thanks for having us.
Great. Thank you for having us. Yes.
Brilliant.
That was it for today's podcast. Thank you for listening in, and please subscribe so you don't miss out on our upcoming episodes. If you want to get in touch with us, you can find our contact details at www.twotokens.org.